Hi, I am Gabby.
Hi, I am James. Together we're preparing for.
ACCAF 5 exam.
Today we're going to talk about
Throughput accounting and theory of constraints.
Gabby. What can you tell about throughput accounting and theory of constraints?
Throughput accounting and the theory of constraints was proposed by Goldratt and Cox. First, let me introduce some definitions. Throughput equals sales revenue less material cost. Bottleneck resource or binding constraint is a process that is slower than preceding or subsequent processes. Total factory costs or operational expenses are all production costs except the costs of materials. The main concepts of the theory of constraints are as follows. In throughput accounting, factory costs are assumed to be fixed costs. Inventory level must be kept minimum. Ideal inventory level is 0. Production must be limited to the capacity of the bottleneck resource, but this capacity must be fully utilized. Main aim of the theory of constraints is to maximize total throughput. This can be achieved in the 5 steps. Identify the system's constraint. Decide how to exploit the system's constraint. Subordinate everything else to the decision in step 2. Elevate the system's constraint. If in the previous steps the constraint has been broken, go back to step 1. But do not allow an inertia to cause a new constraint.
If an organization produces more than one product in a throughput environment, which products are given priority?
To answer to this question, it is necessary to know how to calculate the following ratios. Return per factory hour, cost per factory hour, throughput accounting ratio. The products are ranked according to the return per factory hour or to the throughput accounting ratio in a descending order. The highest ranked product is produced first. The second highest is produced next, and so on.
Can you show an example?
Let's look at an example below. First, we find throughput per unit. Then, we calculate throughput per machine hour. Next, we rank products. Finally, we allocate the resources. First, we produce product A. It will take 26,000 hours. Second, we produce product C. Now, we have only. We can manufacture product B only. So, our product mix is 13,000 units of product A, 7,500 units of product B and 8,000 units of product C. To find total profit, we first find total throughput. Then, we subtract total factory cost from total throughput and find total profit. So, total profit is $150,000.
What can you say about throughput accounting ratio, TPAR?
Let's calculate TPAR of each product in our example. If TPAR is greater than 1, the product is profitable. If TPAR is less than 1, the product is loss-making. Products A and C are profitable, but the product B is loss-making.
How TPAR can be improved?
TPAR could be improved in the following ways. Increase the selling price for the product. Reduce the material cost per unit. Reduce factory costs. Improve the productivity of the bottleneck. Elevate the bottleneck.
That's end of the lesson.